Hi, and welcome to the Stockscores Market Minutes for August 12th, 2019. I am away from the office this week, so doing the video without the video of me, and that's probably a good thing. This week, we're going to talk about how or the importance of analyzing your winning trades. I will then do my weekly market scans and look at the overall market. Of course, we'll do the trade of the week, a day trade on CBLK from Friday. So let's get right into it. This topic this week is analyze your winning trades too. We tend to focus our post-trade analysis on our losing trades, on the things that we think we may have made a mistake simply because we lost. We're trying to figure out what went wrong. But we should also analyze our winning trades to see what went right and what can be repeated. What are the strengths of those trades that we can repeat to continue to make good gains? Now, some winners may still be mistakes, and some losers may be executed correctly. Don't think that the outcome is necessarily indicative of whether it was a good trade or not. We always want to look for ways to improve performance. And so the more you can collect data on your trades from a large number of trades, both the winners and the losers, you can really start to gather the information necessary to make good trading decisions and improve your trading strategy. So don't just analyze your losers, always take the time to analyze your winners as well. Let's get into this week's analysis, starting off with the US markets. And we've had lots of volatility, and it continued again this week. We had a little bit of a bounce back. Of course, you can see the break of the upward trend started there, and we moved lower. We had a little double bottom here, and we moved up from there. And now the question is, are we going to continue to move up toward the all-time highs, or will we make a falling top, break down, go through these lows, in which case we've got more correction ahead? So far, I think it's a positive that the market bounced back, and I'll show you why with the next chart. This, of course, is the weekly chart, and I talked about this last week, the importance of holding this weekly upward trend line. And during the week this week, we were actually below it. You can see there that long tail shows that we went below the upward trend line on the weekly chart, but we came back with that strength at the end of the week to hold the upward trend line. And that means that the long-term trend is still bullish. The buyers are still in control. Yes, we've had some short-term volatility, and I think it probably continues near term, but a very positive sign that we could hold that weekly upward trend line. Doesn't mean we'll hold it next week or 2 weeks from now, or maybe a month from now. We could still get a breakdown, but for now it's a positive. I want you to look back to this time frame here when we broke that weekly upward trend line, and that led to a lot of weakness. And here also the upward trend line was broken, and we had quite a bit of froth for 4 or 5 weeks. So that's what we want to be watching for. If we break this upward trend line, do we then get more of this kind of selling pressure like we had at the end of last year? All right, moving along to the Russell 2000, which of course is the small cap sector for the US stock market. And it has been a real underperformer relative to the large caps for actually a few years, as money seems to hide out in the large caps and is not that interested in the small caps. And as a result, it's really just stuck inside this trading range. Now, it hasn't suffered with as much weakness as the large caps, largely because they haven't gone up as much. And so there's not as much profit taking to be had in those small cap stocks. But until we can break through this resistance level that I've highlighted with that horizontal line, I wouldn't get too excited about the group. If we do break out, then perhaps this sector will go for a run. But for now, you got to be pretty selective with the small cap stocks. Moving on to the Canadian markets, the TSX also had a fair bit of volatility the last little bit here. This, of course, is the short-term 30-day, 60-minute chart. But to end the week, we had a little bit of a rally, but look where it got stuck. I can draw a line across these tops, and that's exactly what proved to be resistance. And it demonstrates the importance of understanding trend lines. It's a very simple concept. Pick your inflection points and draw a line across them, and you will see that they hold up over and over again as lines of support or resistance. And so right now we have encountered some resistance. It wouldn't surprise me if we roll over. If we can then make a rising bottom and then rally up through that downward trend line, excuse me, then we should get back up to those highs there, but some work to be done. And so I would, in the short term, be relatively pessimistic on the Canadian market until that downward trend line can be broken. All right, looking at the long-term weekly chart, again, long-term support has held. We hit it this week. We closed well above the open for the week, but we're still stuck in this trading range, the sideways range that has been in place for a number of months, and therefore you want to be selective. On to the TSX Venture, we're starting to see a little bit of life come to the cannabis sector again. Some earnings have come out for some of the cannabis stocks, and that has been a positive. And I think maybe the psychology is starting to turn as we come out of the summer, which is traditionally a slow time for the microcap stocks. And as a result, we've broken the downward trend line. We're building a rising bottom. And if this market can break up through this little rising bottom pattern. This is something I call a bottom fishing pattern, where step one, you break the downward trend line. Step two, you build a rising bottom. And step three, you break up through resistance from the rising bottom. If that happens, then perhaps we get back to those highs from the spring. It hasn't happened yet, so don't get too optimistic, but at least we're starting to move in the right direction. On to currencies. US dollar encountered resistance. I talked about this last week when it hit those highs from 2016 or 2017. And this week we pulled back a little bit more, but still the trend is up for the US dollar. I think we're just going to see it go kind of wishy-washy sideways in the near term as it fights with that resistance level. Canadian dollar, with the little bit of weakness in the US dollar, the Canadian dollar was able to hold its recent pullback this week. You can see we went down for 2 or 3 weeks in a row. This week we hit a new low at the start of the week, but came back to close pretty near the highs. And I think we're still in this long-term reversal pattern, having broken the downward trend line way back here. We're now working on building a rising bottom. It's going to take time, but the signs are encouraging for a long-term turnaround in the Canadian dollar, but still work to be done. Onto the interest rate chart, of course, we always look at the bond market. Bond market has been going crazy and somewhat parabolic to the upside of late as money perhaps looks for a safe place to hide. And this week, closed well off the highs. The bond market is pretty heavily overbought. And so if we think about linear trend lines, it should pull back to that linear trend line, which means right now interest rates have dropped a lot. We may see them rise a little bit on this pullback. And so if you were looking to buy a mortgage or get a mortgage, it's probably good to do that sooner than later, because I do think that it's a nice window to get a low rate. Commodities. Gold, of course, has been a safe haven. We talked about the breakout in gold when it broke this flag pattern back here, and it's been really on a nice tear. I'm not crazy about initiating positions in the gold market or gold stocks now, because the market's already gone up a lot. It's a good market to hold if you have those gold positions open, silver as well. But I think initiating new positions, chasing this market higher, is somewhat risky. Now, oil is not in an upward trend, is not found the favor of buyers, and as a result, we are stuck in this pennant pattern. We went below the pennant this week, came back to close above it. Notice that this looks quite similar to how the Canadian dollar behaved this week, having weakness early in the week and then coming back to close near the highs of the week. Until we can break one of these lines, it's hard to call. I lean toward probably more likely a break to the downside, but until it happens, I wouldn't count on it. And so what you want to watch for is, does this line of support get broken, or do we break this line of resistance? And if either happens, then you've got your cue of what to do. Of course, an upside breakout means time to buy oil stocks. And if we get a downside move, that is another sell signal, since the upward trend line was broken back in November, October of last year. And finally, the fear chart. Of course, when you get a little bit of volatility in the market, people run for insurance through the S&P 500 futures, and that's what this is based on. The higher the price that they pay for those futures, for the time value and the implied volatility of those futures, the more this goes up. And so it's really an indication that investors are nervous when the VXX goes up. You can see the downward trend line was broken here, but from a low, and we've had a little bit of froth there. I don't know that we're going to see much more. We have some resistance here, although you can't really apply normal chart analysis to the VXX because of the time value decay of that ETN. If you want to understand more about that, do a Google search for time value decay of exchange traded notes or exchange traded funds. It'll tell you a little bit about how that works. I think if the market were to, of course, move to new lows and fail to make the rising bottom that I talked about on the S&P 500, well, then, of course, this would be able to rally again. But for now, it seems to be cooling off. I'd be cautious with this. It loses value over time, and so you don't want to hold it unless the trade is working. And if the trade is going against you, you really need to practice good risk management on that. All right, so my ratings then remain bullish for U.S. stocks in the long term, but short term still bearish as we fight with some volatility right now. Canadian stocks neutral long term, it's in that sideways range, and bearish short term. Gold bullish on both time frames, but pretty overextended to the upside, so it's more of a market to hold as opposed to buy. Oil, neutral long-term, bearish short-term. Markets continue to show that abnormal volatility as we've seen as investors are nervous about monetary policy and trade. Now, with recent gains, profit taking is normal, so it's not a big deal to see a little bit of profit taking, especially as we come into the fall. August, September tend to be months where you do see weakness. Now, we should watch to see if the weekly upward trend line can hold. So far, it has. Gold is strong but overbought. Oil is stuck inside that pattern of compressing volatility. It needs to break out of it. Fear has risen, but there's still no panic in the market. All right, so now let's do a Stockscores Market Scan just to sort of practice how to read some charts. So I thought this week we would run the Abnormal Breaks Canada scan. Now what this scan is for is to find stocks making statistically significant abnormal price moves with strong volume. And so we just load in the market scan. I did that wrong, so I'll try this again. And select Abnormal Breaks Canada. Now this is a tool that is available to Stockscores members. You do have to be a member to use the tool. We do have a simple version that is available for free, but to use most of the filters requires that you are a Stockscores member. I've run the scan, found 13 stocks that meet the requirements of the strategy. And now the final step is to look at these charts to see which ones have predictive chart patterns. Now I can view those in a gallery or I can view them in a slideshow. I'm going to do slideshow because it makes the charts much bigger and I can then start to analyze the chart. So let's take a look at this one to begin. Notice that the increasing volume is there, and that's a sign that this stock is being accumulated. It's presumably a gold miner since it says pure gold mining, and so it's benefiting from strength in the sector. I would say that this stock is actually underperforming the gold sector. If you go look at the price of gold and how it has done in the same time period, really this stock is just sort of lagging the overall sector. But with that said, the pattern is pretty good. This is a little flag break. We had an initial break here with some volume and then a little bit of a pullback and now a follow through break. I think is good, but it's not great. I don't like that it closed off of its highs on Friday. If it does run, it's going to find resistance up in here. So like I said, it's a good chart, but not a great chart. Let's take a look at the next one and another gold miner. This is that bottom fishing pattern that I spoke about. There we've got a downward trend, which was broken here, build of a rising bottom, and then a break from a rising bottom with good volume. Now the issue is risk reward. So our potential upside to resistance is $1.10, and we're looking at roughly 20 cents, roughly 20 cents of downside to support, and 20 cents, is that 90? Yeah, 20 cents of upside. So you're basically buying something where you've got about the same upside as downside. That's a 1-to-1 risk reward ratio potentially. I like at least 2-to-1, which means we would need to have 40 cents of upside for the 20 cents of downside risk. So that makes me not really like this setup. Although I do think the stock is likely to go higher. This stock not really breaking its downward trend line, coming in a lot of resistance. We'll pass on that. Same with this one. You can see it's still below its downward trend line. This stock, Westport Fuel, is a stock that I wrote about in one of my newsletters, perhaps the weekly back here when it was behaving abnormally, and that touched off this upward trend. This is more of a continuation of that pattern as the stock is in an upward sloping channel. It's a good hold, but I would not initiate a position here. Knight Therapeutics, you can see it's inside its trading range, not really a breakout of any sort. TransAlta has broken its downward trend line. That's a positive. Volume, not particularly strong. The other issue here is we're coming off of a low rather than coming off of a rising bottom. And so I'd give this a 6 out of 10 if I was to put a numerical rating on it. Next up is TSC or T.CS or SCL, Shawcor. And you can see that it is breaking its downward trend line, also from a new low, but at least here we've had a little bit of a double bottom. And so that's a positive. Volume is more abnormal than the last one we looked at. Again, it's good. It's not great. The upside is here, so your risk reward ratio is probably close to 2-to-1, which we need. I'd give this a 6.5 out of 10. Sleep Country. If I was to draw the downward trend line, you can see it sitting like that, and this rally comes into that downward trend line. No rising bottom into the breakout, so maybe a 5.5 out of 10 on this one. When I give these numerical ratings, to me it's like the probability of it working. A 5.5 means it has a 55% chance of working. So this looks interesting on this time frame. When I see a chart on the daily that looks interesting, I like to make it a 3-year weekly chart just to get a sense of where everything lines up. And so here you can see that we've broken that little downward slope, but we've got resistance up in here. So now let's think about reward for risk. Support is here, entry is around there, And so we're looking at maybe 1.5 times upside to the next level of resistance, and that's not quite good enough for me. I prefer something more like 2 to 1, so I would pass on JWEL. This stock, it looks like it's well into its upward trend already, but let's take a look at the 3-year just to get the confirmation of that. And there you can see it. This stock really broke out from a cup and handle pattern way back there and is in a nice upward trend, but it's far above the upward trend line. If we think about channels, it's kind of at the top of the channel. And so I worry that it's going to get some profit taking before it goes higher. Good hold, but I would not initiate a position at these levels. AIF, same thing, well into its upward trend, good hold. Probably want to dance close to the exit door because the stock is going somewhat parabolic. You can see that we're curving up and running away from the trend line, and that's always a little bit dangerous for a pullback because it means that the general public is buying it with enthusiasm, and that's often the time that the large investors start selling into that strength to take their profits. And the final stock is Ritchie Brothers. Again, on this pattern, it looks okay. We're breaking through that resistance level. We do have a rising bottom, but it's pretty choppy, a lot of volatility, which makes this this entry signal less reliable. Let's take a look at the 3-year chart just to see how that looks. And there I can see some issues. We've got long-term resistance kind of up in here, really not enough upside to justify the risk, so I would pass on this one. All right, let's just finish up then with the day trade of the week. Again, this is an educational thing. I do it each week just to demonstrate the strategy that I like to do as a day trader. And of course, I teach people my day trading strategies. I have a webinar that runs every day where you get live trade alerts from my algorithm running all day long. So this is a stock that came late in the day, and it emphasizes the point that you shouldn't take your eyes off the screen. Sometimes on a Friday afternoon, it's easy to say, I'm going to go golfing or something, and you can miss out on some great trades. And this one happened just before 3 o'clock. The entry signal on the action candle was right here. And this is a 2-minute chart. So this is the start of the day on Friday, and it was kind of quiet. And then the stock came alive. Perhaps a rumor hit the market about something. I have no idea. I don't look into the news ever. But for $100 of risk, it required a position of 710 shares. 710 shares would cost you $13,675. But of course, you can margin that 3 to 1, leaving you with a capital requirement for this trade of $4,560. Well, at the end of the day, it closed at 18 RR, which meant for $100 of risk, there was an $1,800 profit. And that's a beautiful 39.4% return for a one-day hold simply by sitting in front of your screen and letting the algorithm tell you when there is an entry signal. The computer can do the work of 1,000 people, and it does it very quickly, and that's why I let these algorithms run all day. Again, if you want more information on how to do that, go into the trader training area of the Stockscores website, and also look at the active live service offered on the Stockscores website. You can learn more about how I day trade the market. All right, well, that has been the Stockscores Market Minutes for August 12th, 2019. If you enjoyed the video, please click on the like button, hit that subscribe as well, leave a comment if you have one, and most importantly, going next week, trade well.